Hi, everybody. Peter Schiff again. This is Monday, June 1st, 2009. Although for me, it's actually June 2nd. It's just after midnight. I am in the Emirates Palace Hotel in Abu Dhabi. I'm here for a small investment conference tomorrow. It's a one-day event. There's only a few speakers. Immediately after I speak is Stephen Roach from Morgan Stanley, who is one of the better mainstream Wall Street strategists. I've never actually met Mr. Roach, so I'm looking forward to having an opportunity to talk to him. And it should be very interesting to see the type of reception I get from the analysts that I'm here to speak in front of in Abu Dhabi. It's, I guess, to help them figure out how best to invest the rather significant holdings that they have in their sovereign wealth funds. Anyway, mentioning today's markets, the dollar continued to fall. It was weak throughout the day, particularly against the commodity type currencies like Australia, New Zealand. You know, if you look at the chart of the New Zealand dollar, since mid-March, the New Zealand dollar is now up 38% since mid-March. Now, it's still below its peak in 2008, but at the rate the dollar is falling, you know, it could surrender all of its flight to quality in quote gains maybe by the end of June. We'll have to see. I mean, maybe the dollar will bounce. The dollar index traded below 79. I think it closed above it, but it was trading with a 78 handle for much of the day. Oil prices surged another $2 a barrel. We're now at about 68.5 a barrel for oil, very quickly approaching 70. I've been talking about that I thought we would hit $70 a barrel by the summer. It looks like we're going to get there before the official beginning of summer. And, you know, I think we could still hit $100 a barrel in oil before the end of this year. And, you know, remember, the first time we hit $100 a barrel in oil on the way up was in late 2007. There's a big difference between a $100 barrel of oil in 09 and in 07, because back in 07, we were not in the middle of a massive recession. Americans still had a lot of home equity, or at least they thought they did. They still had their jobs. They still had the value in their 401ks and their IRAs. So $100 a barrel oil is going to feel a lot more expensive for unemployed Americans with no home equity than $100 a barrel felt back in 2007, when we were still in the bubble and everybody was happy with their home equity and their phony prosperity. So we'll see what happens there. Also, you know, the rallies that we're seeing in foreign stocks continue. You know, the Hang Seng was up another 4% last night, but you know, many of the stocks that I follow in Asia, again, were up 5 to 10% overnight in one day. Even the Dow, you know, the Dow was up a couple hundred points today as well, but it's still not moving up nearly as rapidly as foreign markets. And then especially when you factor in the exchange rates. Also, bonds. The yield on the 10-year note today rose 250 basis points in one day. That is a huge, huge move up in yields, down in bond prices. So that movement continues. You know, we still see, I said, you know, strength in foreign stocks, I mean, in U.S. stocks, but we definitely are seeing weakness in the U.S. dollar and U.S. bonds. Also today, as I mentioned last week, General Motors is officially in bankruptcy, although unfortunately it's not a real bankruptcy. If this was a real bankruptcy, the U.S. government wouldn't be forking over $50 billion. Why are we spending $50 billion? Why can't we just let General Motors go bankrupt and spend nothing? You know, if General Motors had a real bankruptcy, then we might actually benefit from a more productive allocation of the resources formerly taken up by General Motors. Maybe somebody could buy the resources, buy up the capital and the equipment, and employ workers in the area to actually make cars efficiently that people want to buy. Instead, the government is putting $50 billion in, and now the government and the labor unions are going to run General Motors. They're going to do an even worse job than the management before. And so instead of gaining something from this bankruptcy, now this $50 billion is just a down payment on a rat hole of losses that will persist in perpetuity. Who knows how much money it's going to cost every year for America to operate this money-losing automobile company. You know, and they're talking about how it's going to change and how they're going to make cars and make profitable cars, but the government can't do that. Governments can't do that. We need free market-based incentives. And for all the lip service that Barack Obama is paying to the fact that the government is not going to interfere, that this company is going to be run by the private sector, that's sheer nonsense. If the government really wanted the automobile industry to be run by the private sector, it would stay out of it. It would allow an old-fashioned bankruptcy to take place. I put a link up on my website at europac.net to an article that was written or appeared in Pravda, basically about America's fall from capitalism and its embracing Marxism. And it's a very, very interesting article written from the perspective of a Russian. Now, obviously, Russian citizens, have a good firsthand experience with Marxism. They lived through it. They suffered from it, and they know it when they see it. And they see it here in the United States. And we should really be concerned when the Russians are accusing us of being Marxists. Also, I want to talk about something else that happened on Friday. I guess the government came out and issued some rules or clarifications between the way these first-time homebuyer tax credits are to be used. Now remember, a first-time homebuyer, according to the government, is anyone who hasn't bought a home within the last 3 years. Now there's an $8,000, I think, maximum credit. And what this new rule says is they can get the credit right away when they close on escrow. And they can use the credit towards their closing costs. Now what the government is saying is they can't use the 8% to apply for the 3% down payment that FHA loans require. But of course that's nonsense, because if you can get the money at closing, obviously if you had to put $5,000 or $6,000 down and you get $8,000 back when you close, then it's all semantics. Obviously you can use the money for your down payment. Now right now 25% of all the mortgages in this country are now FHA mortgages. A couple years ago that was only 3%. A year from now it might be 50%. What is the FHA doing? The FHA is now making it possible with these government tax credits for people to buy houses with nothing down. Well, didn't we learn that that is not the way to go? The free market doesn't want to issue any more of these nothing down or low down payment mortgages because they were burned by them and don't want to do it anymore. But the government hasn't learned a lesson at all. Since the free market doesn't want to do low down payment mortgages or nothing down, so now the government has decided that we're going to do it with taxpayer money. And of course, we don't want people buying with nothing down. We don't even want people buying with 3% down. If you buy a house with 3% down, you still have no equity. If you want to sell your house, the real estate commissions are 5 to 6%. So if you put 3% or 4% down, the minute you close, you have no equity. And of course, if people need this tax credit in order to pay the closing costs, that means they have no money. That means they have no savings. They couldn't buy their house but for the immediate ability to access this tax credit. We don't want people who are living paycheck to paycheck to buy houses because houses are expensive. Things go wrong. The pipes burst. The roof leaks. Things need to be fixed. We don't want people buying houses with no savings. We don't want people buying houses who, if they lose their job, have no way to make the mortgage payment. We would much rather have those people renting. That's where they belong. There's nothing wrong with renting. I've said many times, I am a renter myself. But certainly for people who have minimal means, who don't have a lot of savings, it makes much more sense for them to rent. That way, if something goes wrong, their landlord has to fix it. This is the wrong policy. But why is the government doing this? Again, all the government wants to do is try to prop up real estate prices. They want to maintain artificially high real estate prices because they don't want real estate prices to drop, because when they do, it exposes the worthless mortgage assets that are owned by the banks and now by the Federal Reserve. So in order to maintain the illusion of high home prices, the government wants to officially adopt all of the lax lending standards that led to the bubble in the first place. They want to make it possible for American citizens to get subsidized FHA loans so that they can buy properties they can't afford using no money. And of course, that's the same thing that they did with the automobile industry, and they're going to do it again. I'm sure now that government is running General Motors, Larry Kudlow is now calling it Government Motors, they're going to do the same thing, where they're going to let people buy these cars with nothing down and cheap financing, because that's probably the only way anyone's going to want to buy the cars that Government Motors is going to run off the assembly line. Anyway, that's it for today. I'll try to blog again. I'm here in the Emirates up until Thursday, and when I get back to the States on Friday, I immediately leave for another conference, investment conference in Canada over the weekend. Take care, everybody. So long.